In this video, we will talk about Evolution's AB latest earnings report. So Q3 2024, I'm a shareholder. This is my second biggest position. This is approximately 15% of my portfolio. And as you may have seen for Evolution, the stock is up plus 13%, plus 14% today. So that's a very big deal for the stock, for us shareholders that have been struggling for months and months. The stock has been going nowhere for the past years. So we welcome this news. And in this video, we will analyze it. So in case you don't know me, my name is Christophe Nour. I have been investing in the stock market for almost a decade with a performance of 24% per year, picking stocks. And I will show you how I pick stocks, how I analyze stock, because in this video, we will analyze Evolution. Okay, let's start. So Q3 2024, we will skim through the investor presentation. We will go through the press release, so the real numbers. We'll go in details. And also, I have for you some Excel sheet where I will do some analyses. And spoiler alert, there is a twist in this report, because you may think it's a great report, but it's not that great. And we will discuss this. I don't know the length of this video, but we will take our time to not forget anything. So at the end of this video, you will know everything about this latest report. Okay, let's start from the beginning. Let me put my face in small here. Okay, the presentation, the investor presentation, doesn't give us much value because we already knew what was happening in the business. The highlights of the quarter, they are very simple. They have a new studio in Colombia. They want to go in the US, but I suppose if you're watching this video, it means you already are a shareholder, so you know that Evolution is an online casino player and they want to go in the US. So there are some uncertainties, but apparently it is going smoothly. And capital allocation framework, they talk about how they will allocate capital. They ended their buyback program. They have some dividends again and again. Some new acquisitions, a small acquisition. Okay, very well. This is the numbers, but we will go to the press release to analyze the numbers actually. This is the increase in staff. So as you can see, the growth in employees has decelerated. Now they are cutting some staff, and I suppose this is linked to the Georgia situation, because in Georgia there were some strikes, some blockades, some sabotage operations, and they had to fire these people, these bad employees that limited the operations. So here they fired some employees, they cut operations, so slow down in headcount. So you can expect less costs because you pay less salaries, so better margins. Okay, activity in the network, stability. Yes, partially because of the blockade, partially because of the strikes, operations in Georgia have been reduced. But what you see year-over-year growth plus 30%. So this is going in the right direction. You can say whatever you want about the short-term issues of having a strike. This is going the right direction. Okay, let's continue. New games, revenue per region. We will see that later. Financial development. In blue, you have the revenue up and to the right. In gray, you have the EBITDA up and to the right. And this is the EBITDA margin, quite stable, around 70%. So Evolution is still one of the most profitable business you can find in the stock market. Right now, this is one of the best opportunity in my opinion. And this is the numbers. We'll go through that later. They are ramping up to do some capex, additional capex, especially since they want to go into the US. You have to build more facilities, more operations over there. So more capex and more cash flow. So the business is going in the right directions. They are investing in future growth in the US. They are generating more operating cash flow, and there is a high cash conversion. So that means over 80% of net income, of profits, is translated into cash flow. So that's very good news. The business is asset light with very high margins, and that's very good news for us shareholders. Regarding the balance sheet, some updates. No updates actually. The cash is quite stable. They have paid some buybacks, so share repurchases, so cash is a little bit lower, and they still have no debt. So that is very good news for us shareholders. The company has no debt and has some cash. Okay, outlook. So the guidance is quite stable compared to last quarter. They plan to go live with new student is the newly regulated Czech market. So because of the strikes in Georgia, you have to reallocate your resources. You want cheap labor, you go to developing countries, so you go to where you can get cheap labor, so Eastern Europe, or they plan to go also in Colombia, I think, so Latin America. So yeah, they pivot, they are agile, which is good news. Continued expansion and initiating additional 1 to 2 studio builds 2024, no big news. Execution of capital returns because they ended their buyback program. There was a buyback program of 400 million euros, so they repurchased the shares, and they continue to pay dividends. Accelerated delivery games during H2. Okay, very well. So that's a quick look on investor presentation. Now you know operations are fine, they are pivoting with the strikes, and they gave dividends and buybacks. Now let's go deeper. Now let's talk about the numbers. Okay, let me zoom in. Let me put my face here. This is the report. Okay, now we will go through every pages, and I will change the tabs with the Excel, you will see. Okay, let's start with the third quarter of 2024. You have revenue going up 28% year over year. So that's some very healthy growth. The EBITDA is going up 30%, very healthy growth. Profit up, earnings per share up. They don't mention it, so I have here created this quick Excel, that's a Google sheet, with the profits. If you want to see the growth for profit for the period plus 20%. Very healthy growth. Third quarter net revenue increased 15%. Adjusted EBITDA of plus 12%. You see that if you exclude operating revenues, you are talking about a different growth story. What I mean is, they mention in their report that there was a one-off event, some additional revenue stream, and I put it here in my Google Sheet. Here, other operating revenue of $59 million, dollars or euros, we don't care. And if you remove this additional one-off event, the growth is not the same. This is what they are trying to say. You have other operating revenues. If you remove this one-off event, revenue growth is not the same. We are not talking about 28%. We are talking about a revenue growth of 15%. That's still healthy. That's still nice. We are happy with that, but that's not the same story. And for EBITDA, instead of going up 30%, it's going up 12%. Again, that's still healthy, but you cut in half if you remove the extraordinary event, extraordinary revenue stream. So now at the first page of the press release, there is a story to be told. There is a story of what was this one-off event? What caused this surge in revenue, in profits? Because this is a big change. I mean, growth rate can be cut in half. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of this video. Events during the third quarter, new studios in Colombia and Czech Republic launched. Okay, they pivot, very smart. Other operating revenue of this one, $60 million from reduction of earnout liability. That's our one-off event. That's our extraordinary revenue boost that creates a lot of growth. So first question for you, what is happening with this reduction of earnout liability? Okay, let's continue. Downsizing the Georgian studio due to sabotage activities. Like I said, there were strikes, blockades, they blocked the doors, they cut operations, so they fired these bad people, bad employees that caused all this turmoil. Okay, now let's see the right of this first page. January, September, oh, that's the 9 months comparison. I don't care about this one. Okay, we'll just take a look at the quarterly results, not the 9 months results. Okay, so this is the summary of the Q3. And actually, That's a very short summary, so we will skip it. You have some CEO comments from this quarter. The TLDR is we are going smoothly. We've had some problems with the strikes, but we want to build new games, innovate, because we want to continue to be the leader in the space. So they don't mention anything about competition. They just mention the strikes in Georgia. Okay, very well. And they said that they started to fire people in Georgia. Bad people, bad employees, and they are operating at about 60% of the capacity of the studio. So because of the strikes, 40% of the capacity of the studio was shut down. So yeah, that's a big impact. They have 20 studios. So out of 20 studios, you have one that has been hit. Oh, what is that? A dictionary? No. So yeah, that's a big hit. I mean, Georgia is a big studio for them, and also the second commentary, which is new for this quarter, is cyber attack. Is a cyber attack. During the quarter, there was a significant increase in advanced cyber attacks against our Asian video distribution, thereby impacting our Asian revenues negatively. Okay, very well. Just so you know, don't panic. Cyber attacks have been in the risk section of the annual reports for years and years. It's just that it happens, and as the world is getting more digital, you can expect more cyber attacks. So maybe in the future, Evolution would need to increase their budget to have some defense against cyber attack, so more budget for cyber security, but I don't think this is a big issue for the moment. So for the moment, we have strikes, short-term issue, this is settled. Cybersecurity, this is a short-term issue. Some headwinds with macro data, they were temporary. So for the moment, I see no big deal. This report seems healthy. On a positive note, we began seeing growth in the RNG offering. Finally, in this RNG, that's random number generated games. That's studios, slots, slot games. This is one of the segments that doesn't grow at all. So finally, we are seeing some growth with this stable segment, plus 8%. Very, very good news. Finally, some growth. And I suspect this is one of the main reasons why the stock is going up plus 10%, 13%, 14% today. It's because of a dead segment that comes back to life. Growth is back. Very good news. So we will maintain new games, etc. We will plan to do new games. Okay. In the third quarter, sorry. Oh, this is some dictionary popping up. I don't know. Okay, 16%. Yeah, we see some growth. Colombia, Czech Republic, and then they talk about North America. So America, they wanted to go into the US for years. They did some acquisitions here and there. And this is a big risk for the company because it is a new market. This is a regulated market. Every state in the US has its own regulation. So you can't go broad with online gambling. You need to implement for every state. So it's quite slow. But still, this is growing nicely. Plus 18% growth. So the management said we have a healthy growth for the US, and this was one of the main uncertainty for Evolution. Apparently, it's going well. So yeah, they are just saying, yeah, we are going up fast, going up, growing nicely. And they said, yeah, we have 20,000 employees, and we will continue to maintain a good attitude at work. Okay, that was for the commentary. That was for the growth rate. What I want to share with you is this Google Sheet. So maybe I have to zoom in so you can see better. How can I zoom in? I don't know. I don't know. Okay, let me. Oh, like this. Okay, so I have created really quick in 5 minutes this. I just took the numbers of the press release and put some columns. So that's the revenue for live. So live casinos, that's RNG, so that's the slots. So the big part of the revenue is the live compared to last year. So that's year-over-year growth. Revenue live plus 16%. We were expecting this as shareholders, so no surprise, this is healthy. Now RNG growth, big surprise, finally some growth. We take this as a bonus. Life is good. So net revenue is up 15%. These were the estimates. I think the market expected plus 14% growth. So that's roughly normal. So at this point, you may ask, why is the stock up 10%? This is normal, as expected. And now we have other operating revenue, this Earnout extraordinary, that is 60 million, okay, compared to last year of nothing. And if you add up this total, this extraordinary revenue versus the normal revenue, you get plus 28% growth of revenue, which is very, very nice. Then you have more salaries, plus 21% of more expenses for salaries, wages, D&A, plus 15%, that's normal. Other operating expenses, that's normal. And that's the total expenses. So that's the sum of this one. And you have plus 20% of cost, which is normal. You scale, you have more studios, more employees, that's normal. Now we are talking about operating profits. Operating profits plus 32%. That's very, very healthy. And you have an EBIT margin that is slightly going up from 63% to 65%. So now for the moment, this is perfect. This is perfect. Financial items, that's minimal. We are talking about small decimal points, so I will not cover that. You have profit before tax of plus 30%. Tax on profit, oh, that is going up a lot, because if you remember correctly, before Evolution was based in Malta, and now it's again based in Malta. But in Malta, you had a very good tax rate. We are talking about 6, 7, 8%, which is nothing. Compare this to the US, that's nothing. Compare this to Europe, that's even a bigger gap. And now Malta regulation had a new law saying no, the tax rate will not be 6%, but it will be around 15%. So progressively, all the online gamblers that are based in Malta will have to pay more taxes, and this is exactly what you can see here. The tax rate went from 7% to 13%. So that's more than double of tax. Okay, and if you remove the tax, the profit after tax went from this to this, that's plus 20%. The net margin went from 60%, 60% to 56%. So net margin is going down, but mostly because of tax. I mean, if you had a tax rate of, let's say, 6%, like this, if I put 25, you would have had net margin of 61%. So the main difference for the reduction in net margin is due to the tax rate. This is not a worry. I mean, the business has not changed. It's just the way it works. You have to pay the taxes. And because they did a small buyback, so minus 1%, that's quite minimal in my opinion, you have earnings per share going up 22%. Life is good. Now here is the twist. Okay, let me zoom out. Now here is a twist for you. The twist is this one. Other operating revenue. What is that? Because if you remove it, because it's extraordinary, if you remove it because that's a one-off event, let me put 0 here, everything changes. Everything changes. If you put 0 here, the revenue is still 15%, what the market expected, and then the costs are still up and up and up 20%. So the growth rate for cost is higher than the growth rate for revenue. That's a mess. Operating profits are not up 32%, but only up 11%. The EBIT margin is slowing down. The EBIT margin instead of being 65, it's 61. So you have a decrease here. The profit before tax is now 9% instead of a growth of 29%. So what you see on Twitter, what you see on the headlines, yes, profit plus 30%. If you remove this extraordinary revenue, this is only plus 9%. And the taxes are paid at a higher rate. So if you have higher taxes and less revenue, you have a profit for the period which is stable. No growth at all for the profit. And because of a small buyback program of -1%, you have an EPS growth of 0%. That's a major, that's a major change. Again, let me do Control Z, up. If you now, as you can see the reports or people on Twitter talking about this one, if you have this extraordinary revenue with this one, 60 million in addition, you have EPS growth of 22%. But if you remove this one, 0. That's a major change. So you may wonder, what is this 60 million, Christophe? Why are you talking about this small line? And actually, what is happening? Okay, I'm here to answer all these questions. Let me scroll down a little bit if I'm forgetting something. Okay, now let me put Earnout. I want this in the column, actually, in a table. Maybe I have to put this like 59. Yeah, this one. 69.650. What is that? In the table, you see clearly this is not in net revenue, this is in other operating revenue. So this is different from the core operations. And the explanation you get in this press release is this one. Other operating revenue of 60 million euros from a reduction of earnout liability. Okay, what is the earnout liability? Let's continue. Let's have another look on this one. Okay. Related reduction of earnout liability. That's all we have. Reduction of earnout liability for BTG amounted to that. Okay, very well. What is the earnout liability? Let me continue. Earnout payment, reduction of 2023 earnout payment of BTG of 47 million. What is this one? And I will answer in 1 minute. Earnout. Very well. Evolution may pay an earnout based on live spin performance in 2026. Okay, why are they talking about this one? Evolution, that's the most important one. Evolution has decided to extend the earnout period related to the purchase of BTG until 2026. The earnout liability has been reduced with 60 million. This is our revenue that was added back, which is recorded as operating revenues. Remaining earnout with the net present value of 100 million euro may be paid at the latest in 2026. First question, what is an earnout? Second question, why was it reduced? And third, are we at risk as shareholders? Okay, first question, what is an earnout? An earnout is when you do an acquisition, when you acquire something, you pay partly in cash, like an upfront payment. Imagine Evolution, because this is the case. Evolution wants to pay, I don't know, $200 million to acquire another studio, another game company. Okay, so out of 200 million, maybe the deal will be as follows. $100 million will be paid upfront in cash right now, and the remaining $100 million will be paid not now, but in the future. And to give the acquired company some incentives, they will have financial targets. So the remaining $100 million may be paid later if they reach their targets, their financial thresholds. So I have this article for you. Let me put my face here. This was an article from 2021. I don't know how to zoom in, so that's this one. Evolution has entered into an agreement to acquire leading online slot machine. Slot machine, that's RNG, the thing that is not growing much, the segment that is not growing much. Developer, Big Time Gaming, BTG. Okay, very well. So, consideration and financing. So, the total upfront consideration payable by Evolution for the transaction is $220 million. So, to pay this company, the price is $220 million. In addition, Evolution, that's for the upfront payment. Evolution will pay earnout payments based on Big Time Gaming's EBITDA for the years 2022 and 2023 and 2024 respectively. Their earnout payments will amount to a maximum of 230 million euros and become payable in 2023 and 2024 respectively. Okay, what is that? The upfront consideration will be payable to as 80 million in cash and the rest in shares. Okay, so what you see, the big picture is they paid partly upfront and they paid partly with earnout. So there were targets for the EBITDA. They acquired Big Time Gaming and said, okay, BTG, if you reach this target of EBITDA for 2022, 2023, 2024, you will be paid the rest of the deal, the rest of the money. But if you don't reach this target, we will not pay you. So that creates incentives for the acquired company to be profitable, efficient. That can create synergies. Most deals are like this: upfront payments and earnouts. And apparently, I don't know why, the Evolution today extended the earnout period related to this purchase. So they were supposed to pay earnout to BTG for, as you can see in the article. The article has to be, the earnouts must be paid in 2023 and 2024. They should have paid them, but they said, no, you know what? We will extend the duration until 2026. Why? So the $60 million that you see here should have been paid. So you can consider this to be zero because this should have been paid, literally. So this report is not as good as people think. This report is exactly what the market expected it to be, like around 15% revenue growth and stable EPS, because we expected the strikes, the new tax rate. So the biggest news is the growth is in RNG, plus 8%. So still, this is healthy, and still the company generates a lot of cash with very high margins. So this report is still good, but not as good as you think. So if you remove this one, yeah, that's a different story. And okay, now why has Evolution changed the way they are going to pay for the acquisition? My guess is, first scenario, the acquisition is not working as expected. So the targets, the thresholds are not met. So you postpone the targets, the thresholds, and the payments. Second, that's pure financial accounting, and Evolution wanted the stock to go up, so they wanted to look pretty, and you put lipstick on a pig. That's how the English expression. That can be the case, and Evolution knew that if you add up this one, the report would look sexy and the stock would go up. That can be something, and the stock is up plus 14%. The third scenario, there are some hidden things that I'm not aware of. Maybe if you have the solution, the comment sections are for this reason. Something is shady. Maybe there are some other deals. Maybe this is completely normal, and I don't know. I need to do more due diligence to see if this postponement, I don't know how to say it, this postponing of the earnout are a common thing. Maybe it is not the first time it happens for Evolution. Maybe that is the case. I don't know. But don't be too happy about this report of Evolution. That's the highlight of this video because of this one. Because they are cheating about the numbers. You are cheating about revenue growth. So if you cheat about the top line, everything is biased. So everything is up and to the right. Everything is going nicely. But if you remove this one, the growth is not at all the same. Now let's talk about the geography. They talked about some hacks, some cyber attacks on Asia. What you can see from this geographical split is that Europe is growing nicely, 11%. That's healthy. I'm happy with that. Asia plus 17%. Asia is their biggest market now. So despite all the cyber attacks, they still continue to grow. One additional risk that we all know as Evolution shareholders is that if you have some cyber attack risks for your biggest market, that can be a big hit to revenue, a big hit to profitability. So I think they will have to invest in cybersecurity in the future. That means more costs because you have to pay the guys for cybersecurity, so less profitability. Expect this in the next quarter. This is what I'm expecting. For NA, so North America, as they said previously, healthy growth at 18%. This is still a small market, but the runway is immense. The runway for this big market is gigantic, is huge. Now Latin America, almost no growth. I mean, plus 8%. This is a small market. I won't even talk about this one. And other, this is the remaining part of the world, plus 24%. Yes, they can grow in untapped market, so that's normal. So at the end of the day, the revenue is growing 15%. So if I have to sum up this big earnings report, nice growth, nice profitability, qualitatively, that's great. So the strikes ended. The acquisition is going nicely. New games, expansion in the US is working nicely, up and to the right. They did some buybacks, they did some dividends. Management knows what they are doing. And the last thing is, it is not as good as you think. If you like this content, I have an investing coaching program to make you a better investor. In this coaching program, you will learn a complete investing process. You will learn how to find stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. So what comes with the coaching program? You will get access to an exclusive community of like-minded investors, and you will get my personal guidance to help you build the portfolio of your dream so that you can have long-term results with your stock portfolio. Click the first link in the description to get more information. You will get a 10-minute video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.